Australia's core inflation accelerated beyond expectations last quarter, which is complicating the Reserve Bank's path to further policy easing and prompting money markets to slash bets on a near-term interest rate cut. The latest data is way off the RBA's August forecast from 0.6% for the trimmed mean to 1%. And clearly it's heading the wrong direction. Heads should roll, but of course they will not. Inflation is not low, and it isn't falling. If the RBA did its job, then we should get rate rises, not cuts. All of this is an object lesson for those spruce property purchasers betting on more significant rate cuts ahead. It ain't going to happen. And this also reaffirms my surveys of households who continue to report whopping price rises, hence lingering financial stress for many. Consumer sentiment has continued to decline over the last couple of months, and this news may well see it decline even further. Many economists are now suddenly warning that the interest rate cutting cycle may be over and the next move in rates might be up after the inflation rose more than expected in the December quarter, as businesses passed on high wages and power costs to consumers. The RBA easing cycle is likely over, said Sue Lingong, chief economist at the Royal Bank of Canada. Commonwealth Bank of Australia's Belinda Allen concurred, citing the broad-based nature of pricing pressures revealed in the report. Bank of America Securities also sees an end to rate cuts for now, as does JP Morgan Chase & Co. Today's figures are too high for the RBA to be comfortable to cut the cash rate next week, said Dana Masola, chief deputy economist at AMP, adding that she still sees a case for another easing. We do not think that the September quarter inflation data is the start of a renewed rise in inflation, given the signal from price surveys and faster unravelling in the labour market. The ABS recorded underlying inflation to 3% in the year to September, which is well above economists' expectations of 2.7%, and the first time the annual inflation rate has risen in 3 years, and of course that is at the top end of the target. The trimmed mean, the RBA's preferred measure of inflation that strips out the most volatile price movements, rose 1% in the September quarter. That's even higher than the 0.9% quarterly rise in underlying inflation that Bullock warned last Monday that will constitute a material miss compared to the 0.6% for the RBA forecast in August.